I'm Jared Johnson. On this episode of the Stock Market Playbook, we have Tammy Marshall, and we do something a little bit different. Tammy is the princess of Fibonacci, and I said, you know what? Let's talk charts instead of just typical strategy. And so Tammy shares with us a lot of charts and levels and setups and kind of outlooks that she is looking at. Of course, full disclaimer, we're not making any trading recommendations. We're just looking at some of the analysis that she uses on a daily basis to apply them to live market setups. Have a look. I think you're going to like this episode. Take it away, Tammy. Okay, Tammy, thanks for joining us on the podcast today. We're happy to have you, and it's nice to meet you.
Thank you, Jared. It's very nice to meet you also.
Excellent. Well, you and I were chatting a little bit before we got started, and I always like to give everybody an opportunity to introduce themselves. You know, my listeners may be seeing you for the first time, so I want to give you a chance to introduce yourself. But I think also in this episode, we're going to do something a little tiny bit different than we typically do, which is let's pull up some charts. Let's look and see what's going on in the market because, I mean, you know, I always think of August as this kind of interesting month where anything can happen, and so and it can kind of set the tone for the back half or the back quarter of the year. So so let's look at some charts. But first of all, again, happy to have you. Tell us, you know, just a little bit about your background and kind of how you got here.
Well, my name is Tammy Marshall. I am the Fibonacci Princess. As you can tell from my accent, I am originally from Georgia and live on a little island off the coast of Georgia. Actually, the island next to me is Jekyll Island, which is where the Federal Reserve was formed.
Yes.
And I have two young daughters, and my husband's been in the industry for over 35 years himself. I was actually a special ed teacher for 15 years. And now I have been trading on the stock market for about 15 years and doing my Fibonacci technical analysis for about 12 years. I'm the Fibonacci Princess because I am the protege of the Fibonacci Queen, who has been in the industry over 40 years.
And remind us, who I feel like I should know this. Who is the Fibonacci Queen?
Her name is Carolyn Borodin. And she's on X. She's the queen of Fibs. And then, of course, I'm Trader Tammy 1 on X and Fibonacci Princess on YouTube. So, but I also have a Substack. But yep, I trained with her for a long time. And now I mainly, run some of my own businesses.
Excellent. So, in the 25 or so years that I've been at it, Fibonacci, I've definitely had many encounters with Fibonacci, and it's obviously a great tool, and it's got a lot of interesting applications, and we love to see Fibonacci sequences in nature and everywhere else. And it does seem to be weirdly, I think I'm too logical in my brain to look at Fibonacci and think, why does this keep working?
and because we're human nature, right? And so it's patterns found in nature. And what are we? We're humans that are made from nature. So oddly enough, I don't know if you've ever heard this, but an embryo grows in a mother's stomach in a Fibonacci pattern also. And your fingers are Fibonacci numbers. There's a lot of Fibonacci patterns inside of our bodies. So we're all nature, and that's what we're all composed of. So because of that, the stock market does trade in Fibonacci patterns, and I'll be able to show you more of that today. What I like to say is Fibonacci is a great tool in your toolkit. For me, it's either my hammer or my screwdriver, the one you always want to have around. But if you have other technical indicators that you like to use, you can combine this with it also to get more confirmation, because that's what my work does, is help define risk so that you can control your risk.
And I, that's a great reminder, right? There's not a lot we can control in the market, but our risk and our exposure and how we manage, what we are putting on the table is the one thing we can and tend to be able to control. So I'm excited to hear and see some examples. Now, before we get to some charts, which again, I just think we should do more often on this podcast. Everyone's a trader. Why are we not looking at charts more? So how do you, so right now, are you teaching other traders? Are you managing money? Are you trading your own money? What's your approach to everything?
Well, I trade my own money. And the way that people use my work is that they pay a subscription, obviously, to see my charts and to be able to trade their own accounts. I have anything from, young traders that may not have a lot of money all the way up to hedge fund managers. I have financial planners. I have the basket of people that are in my trading rooms are extremely diverse. So, and
That
that's what I've found over the years is just a huge diverse crowd. And the good thing is I do have a free newsletter that comes out once a week that you can find on X at Trader Tammy One, and that'll give you an overall market view. But it's just really nice to have something that pretty much everyone, whether they realize it or not, are using Fibonacci. It's so widely known and used on the market that it's become important in spite of itself, no matter what the original origins were.
Yeah, yeah. Now, what are your markets that you focus on the most? Do you trade everything, or are you?
Well, yes, I look for setups and, wherever I can find them, right? Sometimes you have to find those honey badgers that are maybe not going along with what's going on the market, because if you want to buy and the market's pulling back, sometimes you have to look at some of those stocks that have maybe already seen their pullback that are starting to take off. The market has been really strange this year. Even though we've had that strong rally in SPX, we've noticed that there's still been stocks that are waiting to take off. And NASDAQ has not necessarily been the same pattern as SPX. I can show you that here in just a minute. But a lot of people have talked about, and I couldn't agree more, that this has really kind of been a tough year to trade, where you see indices going one way, but the stocks that are in those indices aren't necessarily making the moves that you expect them to make. So it's been an interesting year. August is typically a boring month because, my kids are already back in school, but there's kids up north that aren't back in school yet. And, but we're seeing a little bit of a pullback right now. I think it would make sense if we got even more of a pullback in the indices just to digest the move that we've seen over the last week that was kind of shocking compared to what looked to be a time when maybe we were pulling back more. So, this is where defining your risk and, placing those stops and making sure that you have a trading plan put together is just really important for you, and knowing what you can risk and when you really just need to let those trades go or let them run.
Yeah, yeah, and I think it's always, I think we all need a good, I mean, in my own trading and kind of managing money, I feel like obviously on a daily basis we're looking at charts, we're looking at markets, we're looking for opportunities, and I just feel like I personally need at least like a quarterly deep dive to just say, where are we? Like, we're coming into, Q2, Q3, Q4. Is there anything out there that I'm kind of missing? Right. And so I think this is actually a pretty opportune time as we're, starting to head into September. And I always kind of think of the end of summer, and my kids actually just started school this week, yesterday. So they're back at it too. And I always kind of look at Labor Day as kind of that summer's officially over, volume picks up, things start to
Let's
move.
have some fun again.
Yeah, yeah, let's get busy in the markets, and then
Come on,
and
can't this get better?
oh
Let's get some
man,
volume. I need some validity here.
let's go. It's been such an interesting, we have these exaggerated movements with no real good follow through, which is so typical for summer, right? A little bit of a lower volume, kind of, dramatic time. And so I think this is a timely discussion to have of, okay, we're heading into September, October, November, December. We got these months. They have a lot of potential, but I'm very curious on your take, and inevitably I'll have to share some of mine as well. But I think, I want to hear and see what you're looking at now. With your strategy and everything you do, you're looking at the indices, you're looking at individual stocks. Is that correct?
I look at indices, I look at individual stocks, I look at commodities. Like I said, you name it, and I probably look at it.
Just the whole thing. Now, In early on in my career, I did spend a little bit of time on the currency side of things, and I feel like currencies are getting interesting. We obviously watch, quite a bit of the whole Japan situation is getting pretty interesting. And I think there's yen things happening, there's dollar things happening. So I mean, just everywhere. But my focus in my hedge fund now is mostly typically U.S. based stocks and options. But I think this is a great time to really kind of bring in a big overview and kind of see where everything's at. So without further ado, do you want to show your screen or do you want me to show my screen?
Absolutely. I will share my screen. Give me 1 second. Let me move some things around. Here we go. And so what we are looking at here is my SPX chart. And we did here at the close go through a level that we bounced off earlier today, but now we have come down to a lower level. Now, what I tell people is when you first look at my charts, they may look confusing, but after you get used to looking at them, they're not quite as confusing anymore. Now, what I was talking about earlier when we're talking about SPX and these previous levels you see on the bottom are levels of support that I gave my clients buy support, but we have already met the first target extension. That's that green line, 77.25 from the 9th of June low. Okay, so that's the larger swing that we were looking at. The second target is 78.57. So what I say is mini moves tend to terminate at extensions of prior swings. We are extended here on SPX, but on NASDAQ, we are not. We still have quite a room to go to the first target on NASDAQ, which is at 31,737. So we don't see the same story on SPX that we're seeing on NASDAQ. So I want people to be aware of that. We could have a situation here where the SPX pulls back quite a bit while the NASDAQ just chops around a little bit here and there. Or we could have a situation where the NASDAQ continues to take off and SPX just chops around. The more likely scenario that I feel like is going to happen is what I would rather see happen is if we could go ahead and get a nice pullback here in August, maybe beginning of September, to go ahead and rally into the fall to higher highs. Because also we have election season coming up, and you know how the politicians feel about that. They don't want to come with the market down into election season, right?
For sure, for sure.
So we're having a nice pullback right now. The next area of support I have on SPX cash, and of course today is Tuesday, August 18th. This is just relevant. It could be relevant today or the rest of the week, but some of the closer areas I'm looking at are 76.81 to 87. 76.65 to 69, and then 76.50 and on down from there. But to even equal some of the swings we've seen since June, I mean, that June swing would get us to 74.33. The mid-June swing could get us to 75.32, which is pretty close to that 50 SMA around 75.21. So I think that could be a likely scenario. It seems really far away, but it's really not these days, right? What's 100 points on SPX anymore? I remember when it used to be like 10 or 15, 20 points, and we're like, whoa. Now it's like, it's 100 points. Who cares?
Now we call it a Tuesday.
We call it a Tuesday. A Taco Tuesday, right?
That's right. That's right. It just goes crazy. Now, so while we're on this chart for a second,
okay.
Here, so we're looking at, I mean, in either view, you'll look at, I'm sure you look at, big long-term runs, but then you're also looking at what, a swing that could have developed over the past 30 days, 60 days. I mean, do you have a sweet spot that you like to look at as far as these?
Well,
these types
the
of
red lines that you're seeing are previous swings that have happened in the market. So that is called 100% symmetry. It is the most important thing that I run. It can be swings inside a swing. It can be a larger swing. So I run all of these swings to look for price support. And that's when your triggers and indicators come in order to say this zone may be the zone that holds. And like I said earlier today on SPX, we did most of the day hold the level the higher level that I did have. But there at the end of the day, we ended up slipping underneath it. But the zone we have right here, let's see, it must be, yeah, back here. So it's this swing back here, which is a swing from July 6th to July 8th that we had, just a couple of days there. Each one of these black bars is one day. This is a SPX daily chart, but I can look all the way back here for price. I also, I'm sure people watching this video, if you're familiar with Fibonacci, you're going, well, why isn't she looking at retracements? I do also look at retracements. I can look at the retracement from the 29th of July low to the 13th of August high to see what overlaps. And that's such a large swing. I don't even have a 382 retracement until 76.24. So right around that 7,600 area. So I could easily see us going lower here. It's just what makes the most sense to me, but it doesn't mean that we're going to, right? The market doesn't care what I think. It's going to do whatever it's going to do. I just have to trade what comes in front of me.
That's a painful lesson many of us have learned. Right. I also figured out that the market doesn't care if you pray. No.
I think God puts us in our places to be able to help and enrich others. But there's something about the praying that your trade goes a different way. It really does not seem to work.
doesn't have a high success rate. It doesn't. Well, that is the truth. So from your analysis here that you see, you're looking at possibly some lower retracements, and again, I can't remember if we talked about this a little bit before going into hitting the record button, but we're mid to later August here, and August has a lot of erratic moves. In all the years I've been in the market, I have seen wild things happen in August, completely so August in my brain is kind of bookmarked as this anything goes kind of month. But then we have, September is very interesting. And, most of us look for that kind of, the Santa Claus rally through, October-ish, somewhere in late October, November, December, right?
Right.
And so if we kind of think about, how are things lining up versus what we might see happen with some of that semi-typical seasonality, even though I don't even know how typical it is anymore, because summer used to be a nothing burger, as we used to call it, right? And now it moves a lot. We see a lot of movement throughout summer. So.
I know the last 2 summers have not been what we were. This is not what they taught us.
What I read was very different than what I'm seeing here on my chart.
Right.
So, and you're right. We have to adjust with it, and we have to go with it. But interesting to kind of see these things lining up, and how your analysis is taking this. So, for those that might be listening and don't have the exact SPX numbers in mind, give us some percentages. Are you looking for the S&P to drop another 2, 3, 4%, or are you in the more give us something so that the audio only folk can kind of internalize it?
Yeah, I love that. And NASDAQ, let's see. NASDAQ's kind of in an interesting position here because it's approaching the 50 SMA. And that was kind of something that I was looking for today, was for NASDAQ to come and test that 50 SMA. Not only that, we do have symmetrical support there. So this NASDAQ zone is really actually, with me, sometimes I'm like, oh, there's so many zones. It's hard for me to say, but I think it will be really interesting for us to test this 50 SMA and see if we can hold above it. We might even slightly dip below it. I mean, that's what we did the 6th of August here. This is the 5th of August and the 6th of August. Hold on, let me make sure of those dates. Yeah. And we dipped slightly below the 50 SMA. And then the next day we were able to hold back above it. Then we pulled back to it again, as you can see here. And we were able to keep going. So this area, 29,306 to 72, is very interesting to me, just because we are testing that 50 SMA again, and that's what's helping us keep these moving averages on the side of the bulls.
So using this type of analysis, what tend to be things that you see when a slightly larger move happens in either direction, whether it's a slightly larger correction or a rally?
The moving averages that you are looking at on my chart here are the 5 and 13 EMA. The 5 is blue, the 13 is red, and the 50 is the green is the 50, the light green line, not these extensions, of course, that you're seeing. And then the pink dotted line, I need to load more here, but I can maybe show it here. Yeah. The pink dotted line that I have, I mean, it's way down there on SPX. It's at 7,083, but those are the moving averages that I look at on a daily basis on my daily charts. And what I look for is if we start slipping below this 50 SMA and that blue 5 starts falling below that 13 EMA, that is a warning sign to me that we could be in trouble. I'll show an example back here. 3rd of June, we started to fail. The 5 went below the 13. We came down, just about tested that 50 SMA, had a nice bounce. 5 went back below, tested the 50 SMA, had a nice bounce. Then here, let's see, just after the 30th of June is when we saw that huge decline. And that's where you're going to see that 5 crosses back below the 13. We go under the 50 SMA, and we didn't bounce until the 29th of July. That was the pain that so many felt. And they, basically were, which I don't blame them, but, they were so worried that a lot of people either dumped things or lost their accounts because they weren't sure how to manage things. And then on the 29th of July, there you have it. We had that bottom, and then all of a sudden we took back off again. The 5 got back over the 13. We crossed back over the 50 SMA, and here we are with all the moving averages back on the side of the bulls again.
I feel like our buddy over at Situational Awareness could have used this chart. I believe the 29th.
I'm always looking for more jobs, man. I can't be busy enough.
As he dumped a 20 plus $1 billion portfolio right at the bottom. That was just wild times. But how interesting. Now tell me on this right here. So I love to hear, and again, we're doing something a little different on this episode. We're talking about, we're looking at charts. We're talking about your specific analysis. And I want to hear, and again, we're not making a trade recommendation here, but I want to hear, how would you trade? How do you trade all this? Are you going purely directional? Are you buying futures contracts? Are you buying shares of an ETF? Are you trading options? What's your go-to when you're looking at either an individual stock or one of the index setups? How are you managing that?
My favorite ETF is an ETF called ROPE, ROPE. But we can talk more about that later. But ROPE is a great ETF for you to look into. It has the downside protection that you can look for in these kind of situations. Honestly, when I have not, okay, so here, we can go over to NVIDIA. NVIDIA has been great lately. This is actually a call I recently made on another TV show that I was on this past week. But I said, hey, let's be careful coming into this big cluster of resistance. NVIDIA has been doing, pretty well since the 29th of July. But my caution on it was, 3 of the moving averages are on the side of the bears here. When I see the stocks looking this way, Tesla, 5 just crossed back above the 13. Tesla's been struggling for a while. I had no interest in it. Amazon is looking much better. There again, the bounce from the 29th of July. But to be honest, I own some of these shares of stocks. I haven't really been actively trading them. What I've been looking for is stability in the NASDAQ in order to trade these. I'll to tell you the truth, also, I am not only an options trader and buy and sell shares of stock, but I'm a futures trader. And lately, for me, futures has been a better place for me to be until I really feel like I can get a better grasp on what's going on with this market, because to me, it has been a little bit of a wild ride.
It's been a little choppy, and it's been a
little
little
choppy. It's not my favorite way to try to say, oh, okay, this is the options trade that I want to put on. Now, with that being said, I still, if I want to, I will. I just have to know how much I'm risking on that analyze tab. It's my favorite thing out there is an analyze tab. And if if it's worth the risk, fine, I'll do it. But I've been trading futures a lot more lately.
Gotcha. And what are you trading futures on? Are you
ES, NQ, gold? This is my gold chart. Yeah, gold was really interesting. But once it got, so this is my gold continuous chart. And this was a huge red flag for me. And I wish more people would have listened to me. But we had the 200 SMA here. Okay, that's the pink dotted line you can see on the continuous chart. We hit it 1, 2, 3, 4, 5 times. And once we had that big rally, got the moving averages back on the side of the bulls, then we came into price resistance. I was no longer interested in gold anymore. So gold has really not been a very good trade over the last week. It's still trying to make a decision. Is it going to go higher, or is it going to pull back? So right now, I'm not really interested in gold anymore. It was interesting before. NASDAQ has been great intraday. Here's my NASDAQ futures chart. Here again, let me show you the continuous chart, because you want to look at moving averages on a continuous chart, not on the contract charts. But the 50 SMA, the green line here, we're right on top of it on the NASDAQ futures chart. We didn't quite hit it today, but it's at 29,496. I think I have that written on here. Of course, it changes a little bit here and there throughout the day, but 29,496, which is correlating with that price support that we bounced from today. So that is a really great area to look for, especially if anybody's an overnight trader, to see if we can hold this zone overnight tonight. I consider this very key support, because if we start falling below it, the next area is 29,142 to 240. Then the next zone is, let's see, actually need to change that to 28. When you're a human, you have typos sometimes. That's the thing about my work. None of it is AI. It's all me.
doing the heavy lifting. I like it.
If I could find, I do have a AI trading platform called Market Agent X that I am working on. That's working very, very, very well. But I have to homeschool him some more before he gets my Fibonacci exactly correct. So.
they need a little TLC for sure. Now tell me really quick here. We're looking at these charts. I'm seeing a lot of good levels here. I love some Fibonacci. So just and for our listeners as well, give us like just a few words on the moving averages. You have the 5, the 13, the 50,
and the 200. So the 5 and the 13 are EMAs, exponential moving averages. And the 50 is an SMA and the 200 is an SMA. That's what I use on my daily charts. Now, for my intraday charts, I actually use an 8 and 34 EMA.
Okay. And so with like that 5 and 13 on the daily chart type situation, you're looking for entries off that. You're looking for kind of smaller pullbacks and rallies.
I'm just looking to see what they're doing to tell me if this chart is remaining bullish or bearish. So I'm not really using them to trade. I will use the 50 SMA and the 200 SMA to trade, but I do not use the 5 and the 13 necessarily as this is a spot to trade. What I really like is when my Fibonacci price support correlates, though, with a moving average. As far as the 50 SMA, like I'm saying right now, that to me is gold.
Gotcha. So you'll use the 50, you'll use the 200 for trading for entries. Your 5 and 13 are kind of giving you that. Are we bullish? Are we bearish in kind of the near term? And then you're looking at obviously your Fibonacci levels and some other support and resistance. Okay, so that's great. Now, can I make a request? What if we look at either the S&P or the Nasdaq on kind of this the last largest swing?
You want to look at like a monthly chart?
Yeah, well, what if we look at let's see. I'm just peeking at so if we look at the S&P, what are your interesting levels from the last range of, say, which I think we looked at a little bit of this, but March, that big low in March of this year till the high, just kind of this last bigger range right there.
Okay, so this range back here.
Yep.
So that low, 30th of March.
Yep.
Are you wanting to look at? Hold on, let me see something real quick.
Or actually, let me edit my statement slightly.
Okay.
What is a larger range that you would look at? I'm just kind of looking at this as kind of one of the recent ones, but I mean, you know,
I can go all the way up to monthly charts, and that's what I do sometimes. You can see here where I had some resistance around 74.90, and that was because I was projecting previous larger swings to see where we make it and stop. This is interesting. The 31st, let me see what this does. Okay, so we're already through that. So what I'll do is I'll look at previous swings sometimes and go, is that similar to the swing we're in? Okay, we're already through that, so that's not similar. If we looked at, let's look at the 30th of April, 2025 low. So the February to April, we remember that, don't we?
Oh, yeah.
Hold on, let's see. Actually, no, that's going to be the 30th of April low. That would get us, that's way up there, so we don't want to see that. Let's see, those are not similar. So what I just try to do is I try to look at other swings that have happened in the past and say, is this similar to what we're in, so that there's a possibility that we could potentially pull back here. Are we extended that much? But there's not. Oh, that one's interesting. So the low from the 31st of January, in 2016, to the high of the 31st of January in 2022, projected from the 30th of April 2025, actually gives us symmetry at 78.41, which is almost where we are. So that's the kind of stuff I do. So what people say, which is true, that and most, I would say a great majority of people do Fibonacci incorrectly. That's why they don't think it works. But Fibonacci is definitely an art. It's not a science. But those are the kind of things I do.
What's like one of the biggest pitfalls you see in how people use Fibonacci?
They grab the wrong highs and lows. They are not looking at the data correctly. They don't really understand how it works. I see it all the time. They'll be like, oh, I have a 618 retracement here. And I'm like, well, but you're doing it upside down. That's not the way that you do it. And then, a lot of times they don't understand how to make targets, like target extensions, which are from a previous high to low, to tell us where the market is extended and it may pull back. I mean, that's something that happened on SPX that was very interesting. I'd already deleted it because we took out that low today. But the 5th of August high to the 6th of August low, where we had that little bounce there, we came up to that first target extension almost exactly of 78.19 on the 13th of August. We met the extension. Many moves tend to terminate extensions of prior swings. And what are we doing now? We're pulling back. We failed off of the extension of that swing, and we're pulling back. So that's why target extensions are so important to understand. Look at what happened when we met the target extension from the 9th of June low. We met it. We pulled back. Now, we did keep on going there, but we did have a little pullback there. So the work has got to be correct, or you are correct, it will not work, is what I'm saying to those out there that say Fibonacci doesn't work, and it's all, it's not worth using. It's probably because you're doing it wrong.
Yeah, yeah, yeah. No, this is super interesting because I haven't even I haven't talked with anybody about Fibonacci in quite a while, and this is an interesting reminder. And all full disclosure, I'm also interested. Some of my indicators and things that I look at, we're certainly, at least for the near term, on the higher end of what I think the S&P can do from here. I don't see as much upside potential as I see on the downside currently, and again, trying to kind of overlap that
Oh,
August into
absolutely. Well,
September.
of course, you've got to look at things that are going to happen, years and years out. I mean, it's being like a day trader or a swing trader on the market is completely different than managing a fund. Those are two totally different things. So, whatever stock might seem expensive today, even if it pulls back, you can buy more, and then in a few years, it wasn't so expensive anymore, right? So,
That's right.
yes, I absolutely understand that. My husband has managed a hedge fund before, so I get it.
Yeah,
And was
yeah,
also a
no.
financial planner. So when I started doing this, he was like, "Oh, it's all hullabaloo," and now he uses my work all day, every day to help him make his trade decisions.
Well, and I am also married, and my wife would love to be able to say, "I told you." I
I
guess she
told you.
does, but
Oh, I
but
should
then
have
if
a
it got to the
poster board by
markets,
now that says that.
oh, that is awesome. Now tell us. I know, obviously, time is running quickly on us. Where do you see? I mean, and I'll give you a second to think about this. Where do you see the biggest opportunity right now and the biggest risk right now, just in the market in general?
Well, I still think that we have a huge opportunity on SPX and NDX, and the stocks that are involved in them. There are so many stocks that I haven't taken off yet that are still really good stocks. I mean, one of the ones I love is Tractor Supply. I don't know why it got beat up so bad, but down here in
Yeah.
South Georgia, Tractor Supply is not going anywhere. There's a lot of good stocks out there that have been beat down pretty bad that I feel like can continue to rise. And I think that we could, like I said earlier, we could have a pullback now, but here we come into the fall and rally and really, really have a wonderful fall season, especially with elections coming up. I would say gold and crude, silver, things like that. Crude is so news driven that it is dangerous. Plus, it has slippage if you're trading the futures. Gold and silver, I think, are dangerous right now because they did get extended from their previous lows, still don't have all the moving averages on the side of the bulls. I'm not saying that they can't rally and be a great trade. We just need to see those previous highs taken out first on gold and silver before we want to start getting bullish on them again. I feel like I've seen way too many people on X that are trying to trade metals right now that don't really understand how they move and how they work. So please be sure that you are careful when it comes to the metals.
Yeah, yeah, and I think the metals really dragged a lot of people in when they watched gold go crazy and silver go crazy,
Last
and then it
year. Oh, yeah.
proceeded to go crazy, right?
Yep.
And sold off 40% as we saw in silver and some of these wild, crazy moves. So, yeah, I think that's great, and certainly people new to futures markets. That's a that's a different animal than a typical stock type trade, and so that's super interesting. I think that's great. Tell everybody where they can keep an eye on what you're doing. You mentioned your X profile that you have. You have a newsletter, a Substack as well.
Yes, absolutely. I have a Substack, and basically, what it is not only do I have a free newsletter that comes out every Tuesday morning. That's a market overview. I usually send it out about 7:30 a.m. It's a fantastic newsletter that goes over SPX, NASDAQ, gold, and crude and what's happened overnight. That's free every Tuesday morning. And then during the week, I give at least 3 to 5 Fibonacci trade setups with the charts. And when you do join my Substack, you're able to ask me questions. And also, I'll run charts for you. And of course, I am on X, and I am building my YouTube channel, getting closer and closer to that 1,000 subscribers that I'm looking for, right? And that's Fibonacci Princess. So thank you for asking.
Awesome. Okay. And we'll make sure to post all of those links with this episode of the podcast as well. But
and I
this has been
also, just to
super
let you know, I forgot to mention, I run live charts at ElliottWaveTrader.net in the morning time, working with Carolyn Baroda and the Queen.
Excellent. Okay, we'll get all those links posted and make sure that everyone can be able to follow your journey. Sounds like you're up to a lot of stuff, and this was a super interesting conversation. So thanks for sharing with us. Let's see what these markets do. These are all good levels to watch. So hopefully everybody is pausing and writing this stuff down, because we have some interesting targets to be watching for. So thanks for joining us, Tammy. It was a pleasure, and we'll keep an eye on your journey and hopefully have you on again in the future.
Thank you so much for having me, Jared.
Thank you.